I think we are live. Hi, guys. Thank you so much for coming. It's just a special day. It's my first webinar of the year and one near and dear to my heart, which is how to achieve wealth through strategic real estate planning. If you know me, you know I've been passionate about this for as long as you can remember. It's because I've been personally doing this, and I wanted to share more about my story and how to get there. So if you've got any questions, please feel free to put them in the chat, and we'll address them maybe along the way, but definitely at the end. So thank you again for coming, and look forward to sharing some great information. So my story, I'm Jeffrey Neilsen. I'm a branch leader and strategic mortgage advisor here at Team Neilsen with Movement Mortgage. I've been doing this for 20 years, helping homebuyers and agents excel. And I've always been a top first-time buyer lender for 10 straight years. It certainly helped that I went to James Madison and got a finance degree, which helped really set me up for a life of mortgage finance and thinking differently. Before that, I served 4 years honorably in the Marine Corps. A lot of people either don't know this because I don't maybe share it enough, but let me tell you, it changed my life and maybe the man I am. So I'm super thankful and grateful for the service that I was able to give and get. And I'm also the creator of the Buy Up and Rent Out Wealth Plan that we're going to go through today, and the true cost of your home. And these are just mathematical concepts that, when analyzed, will give you courage, bravery, and really teach you the full math behind every real estate story, not just the surface or superficial math. So it's something I've used to personally create wealth over the years. So my story, I guess, of real estate wealth. So I purchased my first home in 2003 with a goal. At that time, I actually have it. I wish I could find it for the presentation, but it was literally, I found it recently in one of my old notebooks, and it was to have 10 homes in 3 years. And although I fell short of that, that was an audacious goal, and probably one set up by my reading and love for Robert Kiyosaki back in the day. And I still love what he's done. But then we just set a goal from 2003 to continue to buy a home as soon as we possibly, were in the right position. We didn't rush through this. It just happened to be a factor of saving for the next home. You only need 3 to 5%. I was able to get in with my VA home on my first home and then leverage that. So we purchased a home every 1 to 4 years until about 2015 on our final primary. And then just in 2020, bought a new second and investment home. So currently have 7 homes, 5 rentals, and an amazing primary residence that is greater and more special than I really had ever imagined for myself and my family. So, but it was a trajectory of this math that pushed me to create the true cost of your home, because you need bravery, you need courage. You can't get it without the numbers. And so that what I try to bring to the table to all my buyers is a deeper sense of numbers and understanding, so that you can design a plan and actually achieve it over time. So it's about the mortgage math fundamentals. And this is the confidence needed, right, to continue to buy when others easily have stopped. Over the last decade, I encouraged countless friends and clients to continue their buying story. Some have, and their trajectory is like, you go from 1 home to 5 homes when you're on that trajectory. I've seemed to found with some of my favorite and famous past clients and current clients. But at the same time, you can also just play it safe and end up with 1 home. And at the end of the story, why not have multiple homes? And even if it's a second home, I believe everyone's lives are going to change, and everyone's situations will grow. And if they had the mindset and the math, they would be able to make these bolder, more courageous decisions. So now I did it in the path of primary residence. It's simple. You get the best terms with the most leverage by buying a primary residence. So why not start in your first home, a small or 2-bedroom townhome? We moved right down the street, same neighborhood, and ended up in I guess it was a 4-bedroom, but townhome. And then we moved to another bigger townhome with a garage, and then to a single family, to another single family, to another single family. So we've moved the primary residence route because it's always easiest and getting preferential terms to buy as a primary residence. Leverage is key, and putting down just, 3 to 5% is all I needed to get me there. And in some cases, maybe a little bit more. But that's one of the big concepts. A lot of people have thoughts they need to save, 20% to get there. So, hey, Kashif, thanks for joining, buddy. So anyway, always buying on the fundamentals. This is something, if you know me and you've seen the way I consult with our clients, it's always a deeper understanding of the numbers because they change over time. Tax benefits is something we used to talk about. Then we stopped talking about, for a number of years when rates were so low and tax benefits for standard deductions grew. So anyway, it's something that's a big part of your payment echelon today that you have to take into account. So anyway, with our experience, I always talk to my buyers, not just about payments like most lenders and banks, but with the finance background, we talk about the real math at buying at all times, whether it's your first home or your next home. True cost, I created this in an attempt to really share the benefits so that you could actually see the principal, tax benefits, mortgage credit certificate, which is a first-time buyer credit, and we'll hit that as well. But by putting that in a visual, it means you can really see that more down payment doesn't necessarily save you as much as you might think. Maybe it does, but you won't know until you see the math. You have to account for principal, tax benefits, because they all have impact over time. Let's see. So sharing the math. Well, I also, in this part of my bravery and the math needed to buy my final, primary residence that I'm working in as we speak, I needed to create this buy up and rent out wealth plan to help other buyers get motivated, understand the benefits of investing long term. And by seeing it, they could actually then take action and start planning their future. And what's really amazing, it's a paradigm shift. And if you've heard me talk, I talk paradigm shifts a lot because I'm an optimistic, excited, visionary of more wealth and real estate. But a lot of times I found that most people, the payment is going to go up. That makes sense, right? You had a great home. It was a lower price, maybe even lower rates, most likely. So now you're looking at a higher price, higher rates. You're going to see your payments have gone up. That makes sense. That's easy to understand. But the true cost, when you factor in all the factors that we're going to do in the buy up and rent out wealth plan, it actually only goes up slightly, if at all. Some cases it goes down. Now, rates are a little bit on the higher end of the spectrum, and they're coming down. We'll see this year, and we can all answer questions on that at the end as well. But most people are shocked because they think, well, it's just going to cost more, and they leave the math right there. So I'm here to share the real math beyond all this. All right, true cost of your home. This, if you've ever had numbers from me, this is on the second page of every estimate I've ever sent. It's near and dear to my heart because, of course, we need to know the payment. And in this case, I'm going to do a test case of a buyer that bought last year for $595,000. The total mortgage payment was $36.99. The mortgage credit certificate deduction, I put that in there just to see as a placeholder. This is if you're a first-time buyer. I'm an advocate of getting every first-time buyer benefit known to man. And so by putting that in there, we're not going to calculate it today for this buyer, but this is an important deduction that we point out to understand their total payment and their true cost. But anyway, as we go down, monthly principal savings, $679, and additional tax benefits of $371. So really the true cost of your home is $2,648 or $2,649. And that's the number, if this is just your first home, you compare to renting, right? Should I rent at $2,600? Should I buy? Yes, the payment is $3,700, but if you're paying yourself and you're going to just wait to get more money back at the end of the year, you have to factor it in if you're making a really logical, critical decision. So that kind of factors into my baby, my passion, the buy up and rent out wealth plan. And I've been encouraging all my past clients to run this because if you have a dream of owning another home one day, it starts with just analyzing your current property. Whether you decide to sell or keep it, this will help you see the real math behind it. So we first factor in their current mortgage. So this is a client that bought maybe 4 years ago or so. in Virginia. They relocated to just over in Gaithersburg in Maryland. And we looked at the cost of their current mortgage, with HOA. So we're factoring all, of the payment and costs. We subtract the principal of $606. So the actual cost, I call this about $1,433, real money going out the window, right? The real cost. Could be called a true cost, but in this case, we then factor in the rents. They're able to rent it out for $2,400. I think if I checked with them, truthfully, I think they ended up getting more, but I'm keeping it from what I remember we originally playing with. So at $2,400. So the total cash flow that they're receiving to rent this home, to keep it, is $967. This is important because if you're getting $967, I know you don't see $600 of it because it goes towards principal, but that's money that's being saved. So any way you look at it, you need to look at a $967 savings account in a business. And that's kind of what, if you want to compartmentalize, that's what you're creating here, a business that generates $1,000 a month in income. We now factor that into the new home, and that's where it gets really interesting. So you'll see in the middle there, total payment, new home with rent. So this payment was $36.99. You saw that in the previous slide. But this new home also has principal of $679. And because interest and taxes are higher, she was finally able to get tax deductions on this of $371. So that brought her actual cost of this home down to $2,649. But wait, there's more. $967 of the previous home's cash flow, right? And it's not just rent cash flow, it's the principal paid, it's the full equation. That $967 factors in because they could sell it. That's another option, and we'll cover that. But that $967 factors in. So that brings the true cost of this new home by keeping both of them at $1,682. So you're telling me they go from $1,433 with their current situation, their actual cost, up to $1,682. That is a small $220 increase to now have two properties. Now, mind you, this home they have is $475,000. The new home is $595,000. I think that's just over almost $1.1 million in assets that they're able to hold on to. And again, anybody that's owned real estate for any amount of time knows we have no idea what the value of our properties are going to be in the future. We can all try to speculate and guess. There's so many people that have sold a great property in Georgetown. I've heard some funny stories over the years, but we don't know. And it's not about that. It's really about the cash flow to generate. And I believe 30 years from now, if we all had 5 to 10 properties, or even 2 or 3, we would have a much safer, a much more secure retirement plan. And that's kind of what the basis of all my thinking has always been, is how do we start planning for retirement today that actually is achievable and it makes sense? Because if you're just putting money in savings, I've always had, maybe I'm the only one, but I've always believed that I don't really know what it's going to look like in the end. I couldn't visually see it. You can run scenarios and you can have hopeful, wishful rate of return, but you can't account for the downfalls and the timing on those. And so the beauty of real estate over the long term has always been rents continue to seem to increase, right? So our cash flow is going to grow, and these houses are all getting paid off by our tenants. In fact, our first one was paid off a year and a half, 2 years ago. And I remember thinking I should probably do a cash out refi while rates are so low and just take the money and bank it for college. I didn't. I took the $1,000 or $1,200 cash flow from it after taxes and stuff. And I'm kind of commingling it. But you can do a snowball, which actually helps pay off the other mortgages, which is the original plan. So more on that in another course, the snowball. That's amazing math that I've done. So I've done these little things that have really helped kind of visualize our future. And it's quite a certain retirement plan as a result. So what's the alternative? Default option, we could sell our home, right? And there's plenty of cases that make sense for selling, but it's all in the analysis. I've got some people selling to net, $30,000, and I wonder, is that enough to move the needle? I don't know. In this case, this is just showing if she did sell her house at $475 minus selling closing costs of $28,000. ends up with a total net from the sale of $91,000 that they could use to put additional down payment. Total payment with the new home would be $3,371. So yes, by putting down $91,000 more, her payment goes from $3,700 to $3,371. That's most people's ambitions, right? Let's face it. All the buyers I've ever worked with were all really interested in what's the word I'm looking for? Lowering our payments, right? And that's the number one goal. But at what cost? And that's the part where we are analyzing. So because they put more money down, there's less principal, there's less tax benefits. So you'll see the true cost of their new home if they sold was $2,487, as opposed to, let me just go back a slide and show you. As opposed to $1,682. So in my book, would you rather have a $1,682 true cost of your home, owning 2 properties, commanding 2 possible rents, 2 miracles that could happen in finance, and rates could come falling back down to all time, like you don't know the future, and having more real estate and mortgages allows you to participate in the magic when it happens. So this has been an easy one for me, and it was an easy one for her to decide, but it's your decision, and at least you can analyze it properly. So kind of the conclusion that I've come up with, and this is kind of my big tally, is would you rather buy a next dream home, right? You're in 2 bedrooms, you've got 3 kids, it's time to move, but you're scared because you got a great payment, right? And that's your focus, which is understandable. But if you could increase your long-term potential net worth from $475 to just over almost $1.1 million, and enjoy the new home and make a new, create a new opportunity in your life with this new $595,000 home, wouldn't that be exciting? And at the same time, your payment does go up. Yes, we can't sugarcoat it, $1,660. So you've got to prepare for that. But there's ways to do that, like changing your savings plans, because you are saving money. And after your rental cash flows, your true cost only goes from $1,433 that you're currently at to $1,682, costing you literally $250 a month to buy a new home. So the goal is to buy multiple homes and keep your payments comfortable, allowing others to pay them off for you, and while controlling the real estate asset, thereby increasing your net worth substantially headed into retirement. And so wouldn't it be nice today to know that in the future, when you go to retire, you're going to have 1.1 million in assets and growing, and hopefully more with some strategic real estate purchases? The answer has been simple for me. Yes. And we can certainly help you as well. It's a mouthful, perhaps. So your future begins with a quick chat. So if you've got questions, minus whatever was happening while I was talking, I apologize. Please put them in the chat, and I'll answer any now, or if it's better offline, we'll look into that. At the same time, feel free. You can get your own buy up and rent out wealth plan, and we can run this personalized numbers for you. It's as simple as sending a mortgage statement, an idea of what we can rent your home for, and possibly what you're looking to price range of your next possible home. And we can run this free of charge. It's a fun exercise. Even people with no intention to maybe move quite now, it just helps the gears move, right? It helps you see that you too can buy, and that your payments, you might have so much cash flow because you've got such a desirable rental property. You're going to save money by buying another house. And I've run these, and I'm like shocked that the buyers, didn't run out and buy a house just based on the math, right? But home can get in the way. And then 3, we've got a great tool that we leverage. Some of you are receiving it, but we can make sure we sign you up for our HomeBot monthly newsletter. It's a free tool that leverages the equity in your home towards your next. You can actually assess rents, Airbnb income, and other opportunities to kind of see how it feels and see and track your net worth. And then lastly, there'll be a replay that's going to come out to you guys afterwards. So it'll be, you can watch it on demand. Okay. Let me see here. Got some questions. Rodney, thanks for your question. Snowballing cash flow to trump inflation and beat monthly expenses is my retirement goal. Nice one. Absolutely. So I've used a snowball. It's so funny. These are old spreadsheets I've used for like 15 years or something. And I've just kept updating them and saving them over time. So it was really interesting because you can put in there, how fast do you want to pay off the home? Do you pay them off by interest rate? Do you pay them off by priority of loan, size of loan? And the more you can do this with credit cards and other things, by the way, and sometimes there's a need for that in this plan. But for me, it's been strictly just how do I pay off 6 properties? And now we're down to 5 properties of the 7. Actually, we're down to 4. I take it back, 4 mortgages. So because we got one paid off. So and 2. So anyway, it's a great question. I've got the snowball calculator, and I'll definitely do a future training and can share it with you because it is kind of fun. Sometimes you want to pay off the lowest interest, but it might make more sense to pay off a smaller loan first so that you can continue to push through. So, and yes, thank you for checking in. How easy is it to get a construction loan to buy, tear down, and rebuild, perhaps a multifamily home? Good question. Something we can talk on. Funny enough, I'm looking into some multifamily DC things right now. It was already done, so there's some purchase opportunities. But how easy is it? Well, depends, especially with multifamily. A tear down construction loan is not difficult. There's some great options there. Multifamily, I guess you get into 1 to 4 unit is a residential property. When you go over 4 unit, it becomes a commercial endeavor. So there's a commercial lender I could connect you with if interested, or we can just talk, a little bit more about that anytime. Great to see you're on. Thanks for being on and the good question. Talia, one of my superstars. My husband and I started working with Jeffrey, bought our first home, 2-condo bedroom. Yep, in 2014. 9 years later, we own 4 properties. What a success story. If you've, we're going to do some future events and have Talia speak on her experience because it is so exciting to hear a buyer that's gone through it, has seen the math, put their head down and just kept coming back and said, all right, I'm ready for my next home. We didn't go through, we went through the analysis every time. We never shortcut the math, but the plan was set. When can I buy my next one? And it's a factor of saving money, right, Talia? We had to save enough. Now, I've got a game plan for everybody doing this, by the way. And this essentially means like I've got a big plan for extracting the equity in your current home before you move to the next through a home equity line of credit. I'm a huge fan. I've done some videos on home equity lines. And so certainly I've got a recipe for success that I recommend with everyone. So David Thomas, best way to prospect for renters? That I don't know. With a broker? Yeah, Talia. Thanks, Kasha. Happy to tell our personal story to anyone considering this method to support the family forever. We're going to have you on, Talia. I'm sorry. I'm having to look at the back screen. We're definitely going to have you on for a future event because your story is so powerful, Talia. And, the outlook. And even right before this, I was talking with Talia and I created in my head, I've created, wait a minute, if you own multiple properties, all the principal and rent differentials, if we factor those in, so I'm creating this, if you factor those in, she's living in her primary home and I'm living in my primary home for free, I believe. And I'll share that on a future webinar. But I started creating it after we got off the phone. So it's just the principal we're paying, right? Principal, we've got to make our payment. But what if we're just saving our money? All the money we're saving every month is just this home savings account. So effectively living for free because we're saving every month. Nursa, thanks for coming on. Are all your properties long-term rentals or short-term? Great question. So these are also things I want to do in the future. Nursa, great question because there's different risk tolerance buyers, right? Or homeowners and investors. We all know that. So all of mine are long-term because I am truly dedicated to my mortgage finance, work and working with our clients and agent partners to achieve wealth and the best financing always. So the problem with short-term, no problem. There's more work involved, right? And so I actually identified there's, Airbnb opportunities, maybe the most amount of work, but the most amount of profits. And I've actually met a family that I'd like to tell their story at some point because it was a whole family business where the husband or mom and dad bought their first properties, bought some more, their kids got involved. Now they're managing them, and they've got, I think, 8 to 10 Airbnb properties that they self-manage, and they make a lot of money. And this just in Maryland. We're not talking exotic locations. We're talking right here in the area. So don't think Airbnb is someplace else. It can be right here. Then there's other, single buyers is a good example where, hey, I've got no kids in the house. I can rent out a bedroom. I can rent the basement. And I've had one such client buy multiple properties, but instead of renting them out to an entire family, which has been my model for simplicity, lowest revenue, most simplicity. I literally haven't talked to my tenants in a decade, 5 years for some. It is set it and forget it if you're looking for a long-term family tenant. So I think it's another, maybe a webinar about, property management by yourself. And should you have a property manager, there's reasons for both. Anyway, so there's different levels of risk and tolerance, and you can have it your way, NRSA. And the more aggressive you are and you want to rent bedrooms, that's kind of that middle tier. More work, more profit, maybe not as much as Airbnb, but definitely more, I would say, than renting it out to one family. Awesome. You can do it both for it. For rental properties, definitely sign up by military by owner. That's a great one, Anya's. They have many responsible renters looking for homes in the area. Also found renters through Zillow. Yeah, 100%. Zillow is where all my listings are. If a tenant expressed interest in leaving, I had a divorce and they had their lease for, I think they had just moved in. So it was like 8 months left on their lease or something, a rare one of ours. And I said, no problem, just let us relist it. I put it on Zillow. Within hours, we had applications and we had people in looking at it. They didn't even miss a month. I mean, by the end of the month, it was rented. So we just let them out of their contract and brought in a new tenant who's been miraculous, and have not talked to her since. It's been like 3 years. Can we use funds from a HELOC as down payment for the purchase of another primary? Absolutely. That's the beauty, is you can leverage. If you're in a primary home right now, the best thing you can do, and I tell people, and they don't do it, and I always wonder, do it when you're not buying a house, because truthfully, you're supposed to be doing it on your primary home. So if you apply for home equity right now, it's relatively low cost to free, depending on, you can access up to 100% of the equity. So if, in her case, if it was $475, actually we got a HELOC for this buyer in particular, and we got like over $100,000. So if there's repair issues, I think she was able to put down a little bit more money or buy it down or whatever we did. So having a HELOC gives you the tools to be able to take care of the property in the future for emergencies, but also just be able to get the best financing. So very good. Hey, Felipe, let's see. Great information. Very clear explained. Thank you. We'll move forward with you and your amazing team. Never too late to start, correct? Never too late, Felipe. Thank you for jumping on. My goodness. Yeah. And that is one of the new paradigms too. I've been sharing this with first-time buyers forever, and I wanted to finally reach my masses of our past clients. We've got 2,000 past clients that I've planted a seed, but we haven't shared the math. And there's only one way to get, in the game. You've got to get the plan. And we finally have time and bandwidth to provide this. And I think especially as rates have risen, there's just more doubts on, can I buy? Maybe I just hunker down. But what if you've outgrown your home? What if you'd rather be in a different school district? What if you could achieve your dream? You just shortcut it by not doing the math. And that's all we stand for. We're not pushing anybody to do anything except for get educated, get clearly educated by an expert who knows what they're talking about. And I haven't met another person quite like me in this regard. And I've only met a few agent partners that shared this, this vision, which is so exciting. And I just think there's a lot of opportunity for past clients and people that own a home to think a little bigger and go, what else could I do? Do the math. We'll do it for you for free and see where it puts you. Anya's lastly, great to know that we can use the funds. And I followed your advice on this point and got a HELOC for my old primary before moving back out. Thank you very much. See, love it. Love it. I love when people take action, because I've got a HELOC for $100,000 for 15 years. It's just sitting there. And if we run on tough times if we need to pay for college, temporary, whatever is coming up. Life keeps happening. Somehow I have a 15 and 13-year-old daughters and a 6-year-old, almost 7-year-old son already. So yeah, you never know. And so I guess we'll leave it at that. Thank you so much. If you're interested, get in touch. We're going to email this out so you can share it or so you can rewatch it or whatever. If you have questions, certainly reach out, and we'd love to be your trusted resource as always. Thank you guys for jumping on, and we will see you soon for another one. Take care. Thanks, Inez.